Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, global markets reporter at Nasdaq. Joining me at the market site in Times Square, we have Joyce. He's the managing director on Nasdaq's Market Intelligence Desk with our midday update and a couple of charts that caught our eye this morning. Brian, it's great to have you with me as always. And interesting, seems like the market's taking a breather today, kind of directionless, a little bit in the green now on the major averages. Not too much to talk about with the trade talks.
Yeah, the trade talks, obviously seems like almost every day we're talking trade talks. Positive news one day, negative news the next day, markets whipsawing around. At the end of the day, the market's having one of the best years we've seen since we came out of the crisis 10 years ago. So despite all the concerns, the markets are doing really well. But recently, this week, a couple of days ago, we did see some interesting news in the FT reporting that the Fed could possibly be looking to change its inflation target.
All right, and that's what brings us to our charts today. Of course, the U.S. dollar, that's going to have a little bit of an impact. And you see some red bars there. I know you're looking at that.
Yeah, so the dollar, it's been chopping around in a sideways range for the last at least 6 months or so. We highlighted the recent range since the last, say mid-October, between 97.5, or 97 the figure, and 98.5. But the last week, it's 5 days now in a row, trading lower. And as I just mentioned, a couple of days ago, the FT reported that the Fed could potentially be looking at changing its inflation target from the 2% level to maybe shooting above 2%. And that's interesting because just last week, one of the Fed governors, Brainerd, was talking about increasing the Fed's toolkit and trying to, with the goal of trying to reach that inflation, that 2% inflation target, which the Fed has been missing most years, over the last 10 years or so. And they were talking about maybe capping rates at certain parts of the yield curve, maybe yield targeting, and she also did mention the inflation rate and maybe looking at a 12-month average. And we've seen talk about that before, but to see that speech made last week and then for this standout article this week in the FT, and what do we have next week? But next week we have the next FOMC meeting. So I'm wondering if the Fed is going to maybe release some clues or speak briefly about potentially looking at different things in the toolkit that they could do to try and spur inflation. And if so, if that's the case, then I would expect something like the dollar to fall.
All right, let's move along to our next chart here. If we're talking about the dollar, we obviously have to take a look at emerging markets as well.
Correct. So there's a very strong inverse correlation between the dollar and emerging markets. Emerging markets increased 14% off the August lows to the recent highs in September, October, I should say. And then over the last few weeks, about 4 weeks, we pulled back about 5%, not a major pullback. But if you look at this week's low, it did bottom at the 40-week moving average, which is synonymous with the 200-day. We know that's a very common technical level that investors will use on the, as support or resistance. In this case, it would be support. We're pulling back into it. And right now, the weekly candlestick looks like a very common bottoming pattern, the hammer stick candle pattern, which you tend to see at many significant lows. So I wouldn't call this a significant low, but a potential intermediate low, and a potential resumption of the prior uptrend could be underway right now.
All right, in our last chart here, this is the emerging markets versus the S&P 500.
Right, so you always want to have relative strength when you're looking at something to, say, add to the portfolio or to buy as a trade or a swing trade. So right here, this recent low, which was made last week, this is the EEM over the S&P 500. It's a ratio. It just made a 16-year low last week, so certainly not something that's bullish. But what we do notice is that momentum made its low back in May, June, and has since been making a series of higher lows. So there's your bullish divergence, and potentially what we have here is maybe a bottoming right now in the relative strength of emerging markets to the U.S. dollar. So I think a lot of it will depend on maybe what we hear next week from the Fed, but some potential signs here. Anybody looking to put on a trade, you could say go along the EEM and use this week's low as your risk level to gauge how much your downside there is and to come up with an appropriate position size.
All right, going into tomorrow, of course, everyone's going to be looking at the all-important jobs data for November. ADP was a disappointment, but today's jobs number weren't, so I think it's kind of a mixed bag of what we're seeing out there right now.
Yeah, and see, the thing is the jobs have been good up until this point, so even if it is a weak number, you'll have people who are optimistic, seeing the glass half full, come out and say, well, one data point does not make a trend. So,
right. Well, we said that about the yield curve, too. We never got into a recession, so.
That's true.
All right, Brian.
Not yet.
Thanks so much for joining us at MarketSite, and thank you for joining me on Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq.